In this video, I want to talk a little bit about drawing precise horizontal lines in the price chart. Horizontal lines can come from many places and for many different reasons, and there is a specific aspect you must pay attention to if you want your horizontal lines to be as precise as possible. This principle is quite simple. Your lines must always be grounded in a place or area in the chart that makes praxeological sense. That means that the lines must be grounded on places where significant events happened. Here it's important to remember that significant events are not necessarily significant in terms of magnitude. They can be very subtle and yet very significant. So in this chart we have a very common situation where price is returning back to a support line created by the two previous highs. Pretty much all traders in the market can see this line, but the problem with it is that it's not so precise because, after all, this is just a support line from the recent past. It doesn't mean much more than that. What we are really after here is exactly where the sellers are going to land, and the buyers will take over as if the support line was going to work as it was supposed to. In this first draft, the line is precise enough, but that is not always going to be the case, so we need to dig into price to see what's really going on there. We can see that price lands a few pips below the standard support line. Advancing this a little bit more, we can move the support line from the standard position to its frequency position, meaning that we want to move the line to the level where we catch the greatest number of upper candlestick tails without violating the candle bodies. In this case, the frequency line, which is just a better type of support and resistance line, becomes a little more precise. The reason for that is that the frequency line is catching a stronger path of past market activity, and the market tends to react or remember these levels more vividly. There is a clear difference in precision when the market touches the new frequency line. It touches it, then it violates to the downside, and then it ends up catching the price again right after. Notice how when price opens below the frequency line, a stronger bullish bar is formed. The same bar also ends up being a fractal bar, which adds to the bullish reinterpretation in this case. If we want to advance this even more, we need to observe the most recent price event that might affect the level where sellers landed. The only place where that could happen is right after the two highs that originated the first support line we saw in this example. In other words, there can be levels in that large up price vector that point to where sellers might land next. In that entire upward price vector, there is one bar that behaves in a different way than the others. We can catch this behavior by taking a look at the upper and lower wicks. There is one candle in that rising vector that shows a lower wick than the previous candle. That is the only time that happens in that entire price vector. Here we have to concentrate on what that means exactly. For all intents and purposes, that means that in the minor flow embedded in the large upper price vector, sellers were able to break down the rising pattern from buyers and create a lower low. We cannot see the lower low being formed in this time frame, but we can see its shadow. A lower wick in a higher time frame can mean a lower low in a smaller time frame, and that's exactly what's happening here. What's even more important is what happens next. Buyers noticed that sellers in the minor flow broke down their strong rising pattern, so they immediately take back control of the situation and produce a strong bullish bar to continue the upward price vector. This bar also turns out to be a fractal bar in the middle of the price vector, in this case being a reflection of the buyer's power. Notice how there is a whole story embedded in the candlesticks. If we place a horizontal line in the exact place where buyers took over again in that price vector, we'll see that it turns out to be roughly the same level where the large sellers landed again later. A few more details that can be extracted from here is the relationship between price and this third horizontal line once larger sellers land on it. First, price touches it and produces a relatively large lower wick, which shows some buying power. Then price proceeds to break the line to the downside, but not for long because price immediately produces another fractal bar and comes back to the upper side of the line, touches it again producing a larger lower wick, and then major buyers finally take off. Observe how one single candle wick in the recent past is able to spark the context for a major price factor to begin in the immediate future. This is partly because markets are a chaotic system, so they are subjected to the butterfly effect, which is when small events can end up producing progressively larger events. I cannot stress enough how important this lesson is. You can view price as just meaningless candlesticks, or you can see the higher order that exists beyond the veil of randomness. Learning how to see the context of what's happening in the market is what is going to allow you to draw the best lines and become as precise as possible. Context must come before lines. I hope you learned something new and useful with this video. If you wanted to learn how to trade with professional techniques, please check out the video courses I provide. For beginner to intermediate traders, I offer the Fractal Flow series, which is composed by the Fractal Flow strategy, the Market Maker strategy, and the Newtonian trading strategy. Each one of these will teach you a different approach to trading. Each of these strategies work on their own, but they can be combined together also. They work on any market and in any time frame that you wish to trade. For intermediate to advanced traders, I offer the Price Action series, which is composed by the heavyweight techniques involving fractal geometry, linear algebra, and very refined contextual market reading to find the most accurate trade entries and exits that are possible to find on a price chart. You can visit my website fractalflowpro.com to see more details about the table of contents of each course and the testimonials from students. If you wish to support the channel, please click the like button, subscribe to the channel, activate the notifications button, share the video, and leave your feedback below in the comment section. Don't forget also to check the other videos in the channel. Thank you very much for watching, and I hope to see you in the next videos. Take care.